Hello, everyone. Thanks again for coming to our second webinar where we discuss Lendahand's crowdfunding campaign on Seedrs. Today with me once again, I'm Lucas Weaver. I work for Lendahand here in Rotterdam, coming to you from my home where I'm currently social distancing. We have our CEO once again, Koen, also here in Rotterdam, social distancing. And we have Lisa Ashford from Energize Africa. Very excited to have you, Lisa. Thank you for joining us today.
Nice to be here.
So Lisa is the CEO and one of the directors of Energize Africa, but she's also the CEO of FX, which is a social crowdfunding platform in Oxford. So Lisa, could you just give us a little bit of your background and introduce yourself to our attendees?
Sure. So my name's Lisa Ashford, and as Lucas said, I'm one of the directors of Energize Africa. I was the director from the launch of Energize Africa, which was several years ago now, and was one of the key parties in getting the whole scheme off the ground. I have worked with FX, which is, as you said, a positive investment platform in the UK since 2013, and I'm the CEO there. So we've raised around £77 million through FX from the crowd, and we wanted to utilise that experience and work with Lendahand to build something pretty awesome with Energize Africa.
And something pretty awesome we indeed do have. Koen, could you please just give people a little bit of just like background on the kind of the legal structure of Energize Africa and how that sits within the kind of Lendahand family of platforms?
Sure. It's pretty straightforward. Energize Africa is a joint venture between FX and Lendahand. So we're both a 50% owner of the entity. I have to say, Lucas, I have an echo, so I hear myself speaking half a second after I spoke the words. Is there anything we can do about that?
Maybe it's. Let me mute mine and see if the echo goes away. Ready?
Yes. No, it's still the same. So, okay, so I may be a little bit distracted by hearing my own words.
Could be Lisa's. Lisa, maybe you just want to put yours on mute while Koen's speaking real quick.
Yes. No, it's still the same. Okay, so that's okay. But it's going to be a bit more difficult for me to speak while listening to myself. But yeah, so it's a joint venture where we are each 50% owner of the company.
Okay, great. And could you just also maybe explain why you wanted to get? I hear it as well now. I don't know where it's coming from, but is it still there now? Yeah. I had to turn down my audio. Lisa, can you mute yours one more time? And then let's try it. No echo on mine. Can you hear it, Koen?
That's probably then me. Yeah, I can still hear it.
Interesting.
So maybe you just go ahead. I'm gonna try and fix this.
Okay, sure. I'll just ask Lisa. No worries. So same question for you, Lisa. And sorry for the technical difficulties, guys. But
Yeah, so shall I just talk a little bit about how the JV came about and why we decided to join in partnership with Lendahand whilst you guys try and sort that out.
Yeah, from your perspective, maybe like, so they approached you, and just kind of tell us the story.
So the Energize Africa essentially came about via a tender that DFID put out. And that is the Department for Finance and Innovation, International Development, part of the UK government. And they were looking at ways in which they could use innovative finance mechanisms to accelerate energy access in sub-Saharan Africa. And both FX and Lendahand were shortlisted amongst a group of platforms. And we decided that actually there were beautiful complementary skills between Energize Africa launched with the backing of UK Aid and Virgin Unite, who contributed the equivalent of sort of VC funding to get us going, and then also to provide match funding, so matching the investment from the crowd with money from UK Aid to build the campaigns and get money to the solar businesses.
So Lily has given me some information that it could be me that's doing the echo, even though I muted myself. But you guys hear an echo now?
No.
No.
Can you still hear me fine?
Yeah.
All right. Okay, and so you just touched on the solar factor. So maybe you could just explain a little bit on that mission for Energize Africa of the providing energy access in sub-Saharan Africa.
Yeah, absolutely. So, and I should start maybe by saying why we decided to work with Lendahand, just a little bit more about that. So, as I mentioned, there's a really good complementary skill set. So Lendahand has a lot of experience in emerging markets, and so that really built on our own experience of running an impact investing platform in the UK. Apart from that, Lendahand's got a really strong social purpose, which very much mirrors our own at ethics. So again, that seemed to suggest that the two organisations would work really well together. And then just in terms of the team, I've worked in a number of JVs over the years, and I have to say this has been the most enjoyable to date, just because the team are so focused. And even though we're two teams across different countries, we work virtually as one, and it works really well. And then in terms of the solar businesses, so the whole purpose of the platform is to raise investment from the crowd to give working capital to the solar businesses, because they are providing solar installations primarily to domestic customers on a pay-as-you-go basis. So they need working capital in order to finance that equipment, because the payment from the customers comes back over a period of time. So the types of products that we offer to the crowd are bonds into the solar businesses that are repaid over a 24 to 36 month period. And they obviously give incredible social and environmental impact to those beneficiaries on the ground who are using the solar, and provide a fair financial return to the crowd who are investing in those bonds.
And this obviously, Koen, sounds a lot like, Lisa, you may want to go on mute now, just because I think I can hear myself. But this obviously sounds a lot like what viewers heard last week when you gave the value proposition for Lendahand. And so Lisa spoke about the experience that Lendahand has with the emerging markets and how that was a deciding factor for them. Could you maybe explain, from the Lendahand perspective, what was attractive about the UK market, and then also why did we decide to go basically solar only in the UK?
Yeah, sure. So the UK is by far the biggest market in Europe when it comes down to alternative financing or crowdfunding. I think on its own, it's already bigger than all the other countries in Europe together. And for us, it's just a market that we thought we want to be there, because what you see is that there's no offering at the moment in the UK to invest as an impact investor in emerging markets. So we scouted the market and also saw the opportunity, especially in energy access, because of the reasons that Lisa told. Like, there's actually a business model here. You have these companies that need funding, but long cash cycles. So if crowd investors can help them providing the funds. They can buy the equipment and sell those on credit to households who are not otherwise able to afford them. So it's really a lot of impact that you can create. So Lendahand was created with the idea to fight poverty in emerging markets. And our first step was to say, okay, then what we need to do is stimulate the local economies so that small companies can create jobs. But we also noticed that poverty has many forms, and one of which is also that a lot of households don't have access to clean energy or to energy at all. Meaning they use kerosene lamps, which if they inhale is the equivalent of 2 packages of cigarettes. It's expensive, it's dangerous, and here you have all these companies that are providing clean energy using solar. We really wanted to connect the two and start in the UK offering exactly this.
And could you also maybe both of you? So our colleague Michelle, who's an investment manager for Lendahand and Energize Africa, gave a presentation at the last Gogla conference, or the second to last, about our ability jointly via the joint venture in Energize Africa to blend finance of private retail investors and then also public and government organizations such as UK Aid and Virgin Unite, as Lisa mentioned before. And one of the key things, the reasons why Gogla, which for people who don't know Gogla, it's probably one of the biggest off-grid solar organization that there is. And what they were so impressed by was our ability to leverage government money to actually access private capital from retail investors here in Europe. And basically, the finding was that one euro from the government, plus €1 from us somehow ended up, catalyzing, all of these funds to actually help with this energy initiative. So maybe Lisa, if you could touch on the, how that works with those UK organizations and how we're actually able to, activate that capital and why they're so happy with this.
Yeah, so as I mentioned right from the start, UK Aid has been, a pivotal part of what we've been doing along with Virgin Unite. And we're lucky that they've taken such a leadership role and are prepared to experiment in what they're doing. So they have been extremely supportive in using that capital to leverage more money from the crowd. And we found that we've done a whole bunch of experiments basically where we have looked at different campaigns and how much we're raising, and then experimented with the amount of match that's come in from the institutions, and also applied it as first loss capital in some situations as well. And by doing that, we've created quite a lot of learning in terms of what works and what doesn't, and being able to use that learning to then go and have conversations with other institutions has been extremely beneficial. And that has meant that they've wanted to come on board as well and experiment with other things. So last year, for instance, we launched something called the First Time Investor Guarantee, which is a relatively small guarantee for first-time investors. But because our sort of access point for Energize Africa is just £50, it means that small investors can come on board and invest for the first time in a low risk, no risk environment and dip their toe in the water. And that means that we can really start to democratize impact investing and bring it to the mainstream, which is one of our key goals. And I think this use of innovative mechanisms and the ability to experiment and learn is really one of the key things that has brought us credibility and trust, and therefore encourages other institutions to come on board. And we were selected as a P4G startup company, which has also given us extremely good leverage into other markets and potentially gives us the ability to grow quite quickly in the coming years.
Yeah, and so Koen has this famous line at Lendahand that I love, where he says, his hope, for the future of impact investing is that one day it won't be called impact investing. It'll just be called investing, and then everybody, of course, does it with an impactful mind. And we're going to discuss that a bit more at the end of this webinar. But I think one of the biggest misconceptions that I've noticed, of course, from the time that I started at Lendahand, is that a lot of times people don't realize in the beginning that it is a profitable model, that there is no money being given away, at least on the retail investor side. Because if you, as an investor, if the company does well, and they make the repayments on time, everything goes perfectly, there's never a donation that is made, in that process. And I think that it seems like that's something that governments are very excited by, is this idea of a sustainable way to actually fund areas of the world that definitely need that funding. And I noticed that from sometimes from Facebook posts and things like that, where people will say, these areas of the world, I don't want to give any more handouts or these kind of things, or that there's enough money being donated by the government, to these organizations. But this money from the government, a lot of times, it may be in the form of a grant or something like that. But the key motivation from the government's perspective is that they want to put money towards something that they think is sustainable in this way. So could you talk about how, basically, that they're working together with us has kind of helped us focus on this model of a sustainable, profitable, way of providing this needed alternative finance? That would be you, Lisa.
Take
Sorry
that.
that I wasn't
Sorry.
clear.
Yeah, I mean, just to give it some context, we worked with the government actually last year when they were looking at data, and 70% of people said that they want their own investments to avoid harm and to achieve good for people and the planet. Now, that's a pretty strong mandate, I'd say, and that just goes to show that people's perspective is changing when it comes to investment. And so if you marry that sort of demand to do good with where we need to get to in terms of the sustainable development goals and how much money we have from institutions and governments to try and achieve those goals, you cannot use one form of capital alone. You've got to basically use all of those different mechanisms to blend together to try and achieve solving those SDGs or meeting those targets. And
Right.
I think we're just starting to show that that is possible now. And the whole industry is growing in terms of impact investing, which you could see as that's more competition, but essentially it's growing the market, and that's hugely exciting.
And just to piggyback on that, so Koen, this kind of fits in with the same explanation of what Lisa just said of multiple forms of finance. It's kind of the same as us with multiple markets. So we know that it's not just going to be investors in the Netherlands that change the world. It's not just going to be investors, in the UK. So, could you talk about the future plans for Lendahand and how Energize Africa and the UK market fits into that?
Yeah, sure. So yeah, exactly what Lisa says is that the SDGs, we started with them a few years ago, and by 2030 we have to achieve a lot of goals. And what we see is that even pre-corona, it was already very tough to stay on track, and there was like a 2.5 trillion funding gap only in the emerging markets to reach the SDGs. So we are nowhere near reaching those. So what you see is that you really need citizens, retail investors, to step up and step in and really, say, okay, I want to contribute and also try to reach those SDGs using some of my investments. Indeed, it's a growing base, especially as more funds are coming into the hands of millennials. You see that they are even more concerned about what is happening with my money and can I do good with my money. But what we also noticed was that being a Dutch platform, we noticed that it's still some kind of a niche, right? People still have to get familiar with the idea that you can actually do good and do well with your money at the same time. And that's why we decided to branch out and go international as an online platform. That's, of course, it's on paper easy to do, in practice not so easy, and it's something we're still working on. So we were very happy to find this partner in ethics to set up together Energise Africa with the help and assistance of David. Because it meant that we could go in there with a bang and really create impact from day one. And we see this as a blueprint for what we can do in other countries in Europe as well, where we may not do it per se through a partnership with a local company, but at least we get a better understanding of how this concept of impact investing, where people can decide which kind of impact they want to create in which countries, on which terms. It's different per country, per culture in Europe, and we get a better feeling of how these sensitivities work. And as we are finding out how we can then best approach people, we think that we should be able to go into the Nordics, perhaps also to Germany, to France, also big crowdfunding markets, where we can then offer the same kind of products. And all the learnings that we've done, and especially with regards to the product offering, as Lisa said, with first-time guarantees and stuff like that, we really hope to make it attractive. We're hopefully, like David, also in those countries, the governments look at what we were trying to do, and which is mobilizing citizens to help and reach those SDGs together with institutions. We really hope that they look at it and say, hey, like David, we want to see if we can contribute as well.
And we just wanna remind the viewers out there that you can ask questions. So there's also the chat. So if you notice something like you can't hear us, or there's a bad echo, feel free to pop that in the chat. But then we also do have the question section at the bottom. And so we will definitely get to those. We don't have that many questions here, so we're definitely relying on you guys to provide some of that so that we can, answer it is that you're looking to hear from us. And so just one, to follow up on that, Koen. So the reason why we're here is we're asking people for their money. We're asking people to invest in us, and we want to put that, to use because, we like what we do and we're excited about it. So could you just follow up on that to say, like, so we get this 2 million euros, from the Seedrs campaign. We've got all these people behind us, excited, want us to be successful. What are we going to do once we get that 2 million to actually, what plans are we going to execute basically from the time that we get that funding to really start putting a lot of these things into action that you guys have mentioned expansion wise?
Yeah, so with the 100 million combined in investments that we've already done with Lendahand and Energise Africa Ethics, we see that as a sort of proof of concept. It's we're not a startup any longer. We now become a scale up. We have tested a lot of things, how to attract private investors, but also how to assess the creditworthiness of companies in emerging markets. Our platform, we worked hard on it from a technical point of view. We know now how the operations work. Basically, the basis is there to really scale this thing up, right? So with the 2 million, what we do see is that in the scaling up, we have a lack of pipeline. Quite often last year, we were sold out, meaning that there were no projects on the website. And that's because on the what we call investments part of the business, there we still have to do and make a lot of improvements. We don't want to become a big asset manager, because there are already many out there, and we don't see how we can add value by also becoming one. We want to be smart about that. And what we see is a lot of emerging fintech technologies, financial technologies like algo lending, machine learning, etc. So first, we need to expand the team. That's for sure. So especially on the investment side, but then we really want to see how we can also improve things by just being smart and agile and using the latest technologies. So we're definitely not a company that's going to develop and be on the forefront of developing such technologies, but we want to be smart users of such technologies so that we allow people to make a smooth process to invest very easily 50 euros or 50 pounds in a really cool company that's credit worthy in emerging markets. And then, as I said before, we really want to go and see how can we expand internationally. That also means that in our marketing team we have to add a few more people. So that's where we want to go to, is still maintain a small team and doing more volumes per person, but really scale it up and grow fast. And in 2 years' time, we should be at a multiple of what we are doing right now.
And so, Lisa, I'm going to bring you back in here because so we gave a little bit of Koen's background last week, but for those of you guys who either weren't here or don't remember, so Koen has worked at Barclays, Goldman Sachs, other huge financial companies, and I don't say that just to name drop, but these guys are people who have worked in the business world for a while. Like they know kind of the feel good stuff that might just be a good story that you hope works out, and they know real profitable companies with a sustainable business model. And I think that's one of the reasons why you can tell that these guys believe in both of these companies so much, Lendahand and the joint ventures, because they know how possible it is. They know that what Koen's talking about with these plans to scale up, that they are realistic plans. And so we kind of skipped over this earlier, Lisa, but I was hoping that maybe you could give just a little bit more about kind of your background before Energize Africa, but then use that to say why you really believe in everything that we're doing here, and why you also believe that it's a legitimate business possibility and not just the feel good kind of impact element.
Yeah. So my background, top level, is I've got many years experience in energy and environmental finance. I started out a long time ago now in financial services, working for a financial exchange and clearinghouse, which is now part of NASDAQ OMX, and but specifically in energy trading, so power and gas, and later carbon. And then following that, so I saw the sort of heady heights of Enron days and the lows, dealing with their demise.
Oh boy! Oh, don't mention Enron.
Yeah, lots of stories there. And then I moved more into that carbon trading, but specifically carbon project development. So worked for a large carbon project developer in the UK, structuring deals, heading up the commercialization team in the UK, until it eventually got acquired by JP Morgan. And then in my time, I got a scholarship actually to go to Saïd Business School to study financial strategy, which was quite sweet. And in that time, I came across FX was just sort of in its formation, and it seemed to take everything that I had learned from a sort of financial point of view, energy, environment. It wrapped it all up, and it just seemed to be such a perfect combination of attributes that I could sort of apply my skills to. And then, for Energize Africa, I actually, long time ago, spent time in Zambia working on rural electrification, rural electrification with Seedrs and the Stockholm Environmental Institute and the Zambian government. And so Energize Africa is sort of like a coming home for me, actually, which feels very good. But this isn't about, like you said before, this isn't about donations. This isn't about handouts. This is about creating sustainable finance solutions that can help to develop countries' economies, essentially.
Right.
That not only are we talking about sort of domestic solar because it's good to have, access to light, and it's safer than kerosene. But also there's so many other benefits, financial inclusion, allowing entrepreneurs on the ground to actually start their own businesses and actually create their own income, to create their own sort of sustainable future. So, this is a very good model for trying to achieve impact, multiple impact at scale, and it works.
Right. Yeah, so I want to, kind of shift to basically the last question that I had prepared, but also combine it with Bruno's question because Bruno basically asked about, I'll just kind of read it. So do you think this to date, like the growing demand from investment with social impact, could change in the lights of a new crisis, meaning COVID? Um, and so the question that I had prepared for you guys was Larry Fink had a pretty famous letter to from BlackRock had a pretty famous letter to shareholders last year, talking about how every company that they invest in from now on needs to be an impactful company. Like they need to have the benefit of the planet and their employees and people. And I think Lloyd Blankfein from Goldman has also been very vocal about this, of how modern day companies, especially in the financial industry, really need to get going with social impact being a main driver for what businesses do. Um, and I think a lot of times when something's new, like what Lendahand does, is very new still, it does take time for people to understand it. And I would probably argue that all of the investors that we have so far are probably fairly, early adopters, people who kind of, see this as being an innovative thing that they kind of got on board with early. And so, what do you think it's gonna like? First of all, what do you think the financial industry is going to look like, kind of going forward? And then this is where I combine it with Bruno, post COVID as well. And then how do you see, to Koen's ultimate dream of impact investing just being called investing? How do you see, that future playing out, especially with, companies like Lendahand trying to lead the way and trying to show people, and there are plenty of other companies, not just us, that are doing this as well. So how do you see the financial industry kind of shaping up? And then how do you see impact going forward as a priority for those companies? And this is for both of you, but Koen, I'll let you start.
Yeah, it's a good question. So what you see is there's a certain trend going on for quite a while now, right? So first you have responsible investing, which basically means that, okay, guys, let's not invest any longer in sectors that are damaging, are very damaging, such as gambling, weapons, etc., tobacco. And from responsible investing, we saw that it went more towards sustainable investing, where you basically go best in class, where you say, okay, of all the sectors that I want to invest in, which ones are most concerned about their ESG footprint, so environmental, social, and governance. Which ones score the highest there, and those are the ones that I want to invest in, given that I still think they have good PEs and all these kind of investment or ratios, that metrics that investors look at. And as of a few years, you now see, so when Lendahand started in 2014, impact investing was not even a term, right? But now you see in the last few years that impact investing is really coming up, and impact investing is about investing in those companies that actually intend to create positive impact, rather than the ones that say, this is my business model, but I'm gonna try and take care of my carbon footprint, and therefore I am a sustainable company. No, these are companies that are really created because their purpose is to create social impact and positive impact. And this trend is non-reversible, even not by something like COVID. And the fact that Lloyd Blankfein and those kind of businesses like Goldman Sachs, and that they are already saying these kind of things. You can say, they talk the talk, but do they walk the walk? And that's, I think, a fair point. But the fact that they're already saying these kind of things, we can call, it's definitely a sign that things are moving. Now, having been on that side of the business as well, I also know that it's not easy, right? That if you have an established business model, you know what works, where how you can make money. Why would you try and do something differently? that's only if people pull you or push you to do that, because only then will you realize that you need to change things. And we as Lendahand and Energize Africa, we have to do that. We have to show them the way. We ourselves, we are not going to change the world. Let's be honest, right? But we can actually show others the way that how they and those big companies, how they can behave and do things differently, so that actually the world can be changed. And I don't think that it's going to be any different now with COVID, in the sense that, if anything, people reflect now and understand better that what we were chasing, this economic growth and wanting more and bigger and faster, may not actually be the way. And people are now starting to realize that what we have and what we had was very precious. And how can we get back to that? And how can we make sure that other people can also have that, right? And then, this whole impact investing in emerging markets may actually become even a bigger topic than it was before COVID.
Yeah, I think Bruno, feel free to put the comment here on the chat. But I think Bruno is actually implying that it will be, more positive going forward post COVID, because of what you saw after 2008 was, it took a lot of time to shake it all out, but it does seem like for the most part things are better, and if you look at how actually the financial industry is in a good position to be able to help during COVID because of the capital reserve requirements that they only have because of 2008. So Bruno, yeah, feel free to pop in the comment there, but Lisa, I'll let you pick up off of, where Koen just left off.
Yeah, I'm just to follow on. I mean, maybe I'm slightly more skeptical, but I think there needs to be a lot more transparency in financial services, and yes, it's coming. It's coming because customers are demanding it, and that demand, like you say, it's not a shift that's reversible now. It's becoming a bit of a landslide, and there is a lot of disruption happening in financial services in terms of the way that people access products, the way that people are going to manage their money, the types of things that they invest in. And the larger companies who are greenwashing will get found out. And I think that the more innovative, disruptive organizations will start to win out over time. And obviously, we're not at the same scale that some of the large financial institutions are at. But I think that, there's a lot of change coming in terms of people's jobs and the way that we live our lives. And I just see it as a huge opportunity. And in terms of COVID, we're already seeing in the UK, it's the sort of phrase being coined is build back better. And that's going even further in terms of, rebuilding the financial markets or rebuilding finance to have a much more conscious moral compass. And I do think that we're sort of at the forefront of that, and that feels a good place to be and the right place to be, because as millennials start to see sort of more wealth being generated by themselves, or there is a transfer of wealth to them, they essentially have the power in their hands to sort of design the future and the way that they are going to direct their money. So
yeah, feel free to speed up
bring it
that
on.
transfer of wealth to millennials. I won't I won't stand in your way at all. So I think we can just kind of close off with this, because the rest of the questions are a little bit more now kind of getting into the nuance of the technicals of kind of how the business works. But it definitely seems post COVID that all of us now have gone through something traumatic. You used to be a kid and you would listen to your great grandmother talk about World War II, and you would think, well, like that's so far removed from me. But now, and I think with Lendahand, you see, and Energize Africa, a lot of people who have traveled a lot, so if you've been to Africa, if you've been to Southeast Asia and some of these places, they tend to get it more. They tend to kind of connect with our mission. But now everybody has this heightened level of empathy because we're all going through something. And I think greenwashing has always kind of relied on these companies where you'll find people who, oh, that sounds like a nice thing to do. I don't do a lot of nice things, so here I'll give you, 100 euros. But now that everybody kind of has this heightened level of empathy, all of a sudden greenwashing companies don't seem to cut it anymore. That you can kind of now have that kind of BS filter where you think, I don't know that you're actually doing anything good. And then companies like us who really are, on the front lines trying to, and that's what Koen said in his post about why we're raising 2 million, is because we really believe that we can, like, we're not going to change the world by ourselves, but we really believe that we can be one of those companies that shows other companies, hey, it can be done. And, we have a lot of investors that want you to do it, that would happily support you. So definitely, I think that will hopefully be a positive development. I'm going to switch now to a couple of these questions. I think can be combined. One from Harold and then one from uh, Herco. So the one question is, how do you handle defaults, and what are your lessons learned from previous defaults? And then the other question is, how is the risk and fee revenue shared between Lendahand and the joint venture? We'll get into the has it changed from COVID's part, but I think the important thing to do is to break down probably where the risk lies, because the question seems to maybe have it a bit confused of an investee. So normally when we say a local partner, we're referring to an investee, someone who raises funds on our platform. So I guess it would be um, interesting to maybe just explain how they interact with us, just to answer his question of, is there risk involved for an investee in a way? Koen, if you want to take that one.
Sure, and then I'll also touch upon what we've learned from the defaults we that we experience.
Well, I want to ask that one in a separate question because I want to get
Okay,
the full, yeah.
sure. Okay, so how it works is that so we see an opportunity by financing what we call the missing middle. The missing middle are companies that have a hard time or no luck at all when trying to raise financing so that they can grow their company. So these are companies that are obviously too big for microfinance institutions, but too small for the banks who require collateral and stuff like that. So these companies range anywhere between companies that have a funding need of say 10,000 euros all the way up to maybe 2 million, because even these guys have a hard time getting financing in at affordable rates at least. And even banks in Africa, they tend to do larger tickets, just
Yeah,
like
yeah.
like we do in Europe.
Just to add to this, so Kuhn mentioned the number earlier of the 2.5 trillion. That's the shortage of the SDGs. But there's also a statistic, if you look at our pitch page on Seedrs, where we mention a $5.2 trillion deficit between SMEs and below in emerging markets that are trying to get funding to create businesses, to
Yeah,
grow businesses, to operate
yeah,
businesses, and they just can't get it. So that's
yeah.
$5.2 trillion, that's missing.
Yeah, it's I don't know even how many zeros that is, and what we see is that if you look at developed countries like UK, the Netherlands, you see that around 60% of the jobs is created by those small medium enterprises, whereas in emerging markets it's only 30%. And that's not because lack of skills or because of the infrastructure. It's because of lack of financing. That's it, right? So those are the companies that you want to finance. But so we are able to do an assessment, to due diligence on the somewhat larger companies, well, larger for us then, that have a funding need of say 2 million or 2.5 million each year. But if you go back to the ones that only need 10,000, and they're in Mongolia or they're in Uganda, for us, well, that's why I said, hopefully with algo lending and machine learning, in the future we will actually be able to do that ourselves. But at the moment we are not able to do that. But we still want to cater to them. But what you then have to do is work together with what we call a local partner, which is a local financial institution who is focused on catering to the missing middle. Because also they have a hard time finding finances because they are catering to these, almost impossible to finance companies. So we really want to support them, and we provide finances to them. But it means that they are the borrower of the funds that is made available by our crowd investors. So they are the counterparty, if you want to use a professional term for that. And they are then on-lending that to the companies where we want the money eventually to go to. So that's why we are using local partners or financial intermediaries in those countries to be able to finance also the smaller SMEs.
And so just to maybe break down then, you mentioned, so these companies come to us, they say, hey, we have this funding need. And then as we've detailed before, the way that Lendahand earns revenue is with a success fee. So when your project is fully funded, which 100% of all of our projects have been fully funded, you then have to pay this success fee, which ranges between 2 to 5%. Am I correct so far?
Correct.
All right. And so how does that fee structure then, when you talk about that revenue, how is that split up among Energize Africa and Lendahand? That was the question earlier from the chat.
So if the question is, for instance, in 2019, how much of our revenues did we get from Energise Africa versus our own Lendahand platform? It's around 25-75 is more or less the allocation.
Yeah, maybe I'm not sure how that question actually is. So they say, how is the fee revenue shared between the JV and Lendahand? So I don't know if maybe they mean how much revenue came from which one, but more so how do you decide, I guess, like where the money goes. But I think that's actually a pretty simple answer, right?
Because it's 50-50. We're both 50% owner of the company, but we actually don't. From a cash flow point of view, it's not that it flows into both the owners as a dividend or something. We keep it in the company so that we can actually grow Energize Africa.
Great. And then let me just. So then. I guess now we can kind of, pivot into the risk part. So it doesn't particularly, so once a project is live on a certain platform, whether that's Energize Africa or Lendahand, the risk is then going to lie with the individual retail investor, so the person in the crowd. So could you explain basically the default rate for Lendahand projects as a whole? And then, like you were going to say earlier, how does that then impact a retail investor if one of their projects does default? And then after that, we can talk about what we've learned and what both you guys have kind of implemented to try to protect against that.
Yeah. So what you see is that the interest rate on the projects is on average is a bit lower on the Lendahand platform than it is for Energize Africa, and that's because lending to those financial intermediaries usually involves less risk. The financial institution itself is diversified over regions, over maturities, over sectors. Almost all of them are regulated by their local authorities. It's less risk involved and therefore also less interest. On average, it's around 4.75%. So suppose so we have done. 70 million on the platform. Suppose you would be the person who would have done all of the 70 million, then you would have achieved. So then the headline interest rate that you would have achieved was 4.75%, and then you have to subtract. So we don't charge a fee to the investor. And this is net of the success fee that is being paid by the investee. But we do experience defaults, and so far, on average, that's around 2% per year. So the average net return, net of all fees, costs, defaults, etc., is then 2.75%. We think that's very healthy. If you compare, of course, is that a fair risk premium versus getting zero or even a negative interest rate on your savings? That's, I guess, up to the investors to make. But we should not forget that next to this 2.75% net return, that people also achieved a lot of social return, and that's you can't measure that in funds.
Right. That's kind of where the impact and the impact investing comes from, is that you are obviously we talk about that, personally we talk about that in our marketing all the time, of how you are getting, less of a return than the risk profile would warrant, but that's why it's an impact investment, because you know that these people wouldn't be able to be as successful, they wouldn't be able to grow their business as much, every percentage point higher that the interest rate is, that's 1 percentage point more that a borrower is going to have to pay. And so, Lisa, you guys are, like you mentioned before, doing something pretty innovative with the 100 pound guarantee on your first investment. For anyone basically who invests in a project that defaults, your first investment up to 100 pounds would be totally covered. Can you talk about why you guys decided to do that, and other ways that maybe you hope to de-risk things for retail investors in the future?
Yeah, sure. So an important element of Energize Africa is bringing impact investing to the mainstream and trying to democratize social impact through investing. And we wanted to be able to give people so many financial products are, in terms of investments and even impact investments, have a very high minimum investment level. So part of the qualities of Energize Africa and Lendahand is that they have a low minimum investment, but still we understand that even a small amount of money, it's all it depends on your own net wealth and your own sort of liquid assets. So even £50 can be a lot of money to certain individuals. So we wanted people to be able to try and be able to understand and learn about impact investing by doing, and being able to sort of dip your toe in the water with a guarantee has really allowed people to do that. And it also has brought trust and credibility to what we do as well. And I think that when you we do a lot of these sessions where there's loads of industry people come together and they talk about how can we get the mainstream impact investing, or how can we get people involved in impact, and everybody talks about, well, get everyone to switch their pension to a more ethical pension. And then you realize that there's not that many ethical pensions, and everyone grinds to a halt and says, oh, that's way too difficult. And actually what they could be doing is just making a very small investment and trying it in a risk-free way. And so we're giving people a sort of more frictionless way of doing that. And sort of broader, we obviously understand that there are risks with emerging markets and companies that are still quite young in their maturity level. And we clearly need to work hard to bring more guarantees and more innovative products that will just soften that for the retail market. That there will always be things that we can't necessarily count for. There might be policy changes in a country, but if we can try and cushion the retail investors more, then they will be more confident in telling people what they're doing as well, and being proud about what they're doing. And that is obviously the best way of growing as well, is by people talking about what they're doing and really feeling like they are achieving impact. So getting more partners on board to de-risk some of the products is a key focus of ours, and something that we'll be doing a lot more of in the coming year or so.
Awesome. I just noticed. So, guys, last time, because we're getting close to an hour here, and we still only have the 4 questions, and I tried to type in the chat, but it won't send. So I'm not sure if my chat says that there. But one important question that I did forget to answer is the question around profitability. So the question is, hi Koen, why is Lendahand not yet profitable, and will you accelerate the plans to become cash flow positive earlier?
Okay, yeah, it's actually the other way around. And let me explain that. I think there were several points in time where Lendahand could have decided to become profitable. So we started in 2014 with 3 people, and we grew that, and now we're with 17 people plus a JV with the Energize Africa platform, and we're also going to start a new JV actually next month, which will have a focus on agriculture in emerging markets. And all these things that and the product development that we just mentioned, that we want to grow, means that we have to invest. You have to invest before you see the results, right? So at all these points in time where we could have decided to say, hey, now we have a business model that works, we can actually generate profits. We could have done that, but then it would have been on a smaller scale than where we are right now. So when we started in 2014, we had this crazy idea that one day we may actually be able to do 100 million with Lendahand, right? And it was like this far stretch, like this dream that we had, like maybe that will ever happen. And that is going to happen this year, very likely, right? So do you want to stop there then? Or do you see like, hey, what we've built is a basis of something that can be much larger? And now our dream is actually 1 billion. Why not have 1 billion flow through our platform to emerging markets, to the people that need it, can create something with it and give it back to you with an interest? So it means that we have to keep investing in people, etc. So it basically means that if we accept this new funds from Seedrs, we're gonna invest in that growth again. We're gonna do this initiative on a larger scale. It also means that we have to push back our point of profitability again, but it's in return we get this growth, and at that point, if we then decide, say in 2 years' time, that okay, now is the time that we should generate profits, because it's not unlimited, right? At one point, you do have to decide that and say, okay, we want to be a sustainable company. We want to show to our investors that this works, and we can pay back in dividends, or maybe we get acquired. We don't know, but if and when we do that, it's going to be on a larger scale than it is right now. So yeah, we're going to push it back, but we're going to hopefully do it on a larger scale, generate profits.
Right. And some of that, right, is the benefit of being an online platform, right? You don't have these, huge fixed costs that kind of make you do things you don't want to do, right?
It's what we do is so scalable. So what this whole business of what we do, and now I'm gonna just it's like it's a bit weird, because then suddenly you talk about share of pocket of your investor, of crowd investors, etc. But if we look at what does it cost to acquire one investor on our platform, so engage with the person and let him or her become an investor on the platform, versus how much revenues do we generate from one such crowd investor, we see that that's a multiple of what we can earn versus what it costs us. And this is called then positive unit economics. We are not profitable because we have this fixed cost base, right? We have people that we employ, we have an office, etc. But if you have positive unit economics, it means that if you scale it up, so you're going to spend more on marketing, you grow, you're going to do more volumes, etc. For each person that you onboard, you actually make a multiple in return. So if we do this on scale, we're actually going to become a profitable company, because we don't, we now have one compliance officer. We don't need 5 compliance officers. If we do 5 times volumes, we may need 1.1 compliance officer. So this is hugely scalable, this online platform. And it's always a little bit weird as a social enterprise to talk in those kind of terms. But yeah, it's the multiple that we can create is huge. The upside potential is huge.
Awesome. Well, guys, that's all I have. We're at 59 minutes now, and we don't have any more questions. So, if anybody does think of any questions later that you want answered from us, feel free to find us on Twitter, just at Lendahand, or send us an email at info@lendahand.com. To learn more about Energize Africa, just go to energizeafrica.com. There you can just see everything that they have to offer and everything that they're about. So, Lisa, thank you so much for joining us today. It was quite a pleasure just getting to speak with you in general, but then also to get your value perspective on all these things.
You are welcome. Nice to be here.
That was an energetic "you're welcome" if I've ever heard one. And Mr. Koen, thank you so much again for joining us at your own company's webinar. That was very nice of you. All right, guys. Thanks again for tuning in. We'll be back next. Well, Koen and I, or someone, but not Lisa. We'll be back next Wednesday to answer more questions. So, like I said earlier, if you think of things that you want to hear from us, send us something on Twitter, email. And thanks to everybody so far. We're at I think it's almost 300, now investors on the Seedrs campaign at 84% the last time I checked. So thanks to everybody who's invested so far. We're on our way trying to get that 2 million. So thanks to everybody supporting us, and keep spreading the word. All right, I'm just going to click end broadcast. Bye, guys.
Cheers. Thank
Bye.
you. Thanks, Lucas.